Guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about how to build a trading plan. So we're going to be talking about everything you guys must have in your plan, some strategies and some good approaches. So I hope you guys all enjoy this. If you guys do, hit that like button, subscribe. Also guys, if you guys are new to the channel and you're like, who is this random guy? My name is Carter. I'm a full-time swing trader in the stock market and I have been for over 6 years. And with that being said, we do have an amazing school where I teach people my approach, how to find stocks, my strategies, everything when it comes with navigating swing trading and the stock market. And we're doing a limited time sale for 50% off. Code LEARN to get 50% off. It's absolutely fantastic. We got private live streams, quizzes, a group chat, lectures, everything. Whether you're a beginner or you're a veteran trader just wanting more information, check it out down below and check out that code LEARN for 50% off. So we're going to be talking about how to build a proper trading plan for swing trading. So the first thing that you guys are going to need is you're going to need to define your goals. Now, the reason why I say this is because as you develop a trading plan, each person's trading plan is going to be different. It's going to be tailored to your goal. So if you're aiming for 1% a week or 1% a month or 10% a month, it all will change and affect your trading plan. So you need to identify how much capital you're willing to lose on a single trade for your risk tolerance. You're also gonna want to understand your time commitment. It's assess how much time you can dedicate to trading. This will influence the type of trades you pursue. So the reason why that's important is, you know, if you're a day trader, you're gonna have to be actively in tune with the stock market compared to swing trading or even just long-term investing. So you need to define your goals and figure out what type of trader you want to be. That's the first thing. The second thing is you're going to want to build and work on some sort of strategy. So this is where having experience paper trading and just having experience in the market plays a factor, because for me, I'm a swing trader. I swing trade. So as you're ready to as you're ready to swing trade, you need to focus on specific strategies that you want to employ. This could include breakout trading, pullbacks, trend following, moving average lines, a variety of different things. Now, one of the more important things that's in your trading strategy is going to be your entry and exit criteria. So what I always do is have a checklist. I have a checklist that I go through before I place a trade to ensure I'm following a stock that is in line with my trading plan. So maybe it's a stock on an upward trend, on hourly support or daily support. You want undervalued on the RSI. Maybe you want a crossover with the MACD. Maybe you want the stock on some sort of moving average line. So common indicators include, like I said, moving average lines, RSI, MACD, or even chart patterns. If you're really good at pattern recognition, chart patterns are a really, really easy way where you guys can understand more about what's going on with the stock. The next thing that you guys need are going to be some good tools and platforms. So this is very important. For me, I use Moomoo for my broker, for my scanning. They're awesome. I'll put them down below for you guys. But having good charting and good technical indicators, this will help find stocks that suit your trading strategy, but ensure you're using a trading platform that offers the technical indicators that pretty much you need for your strategy. So maybe you like Robinhood or, you know, whatever it may be, but the biggest thing is just as a consumer, you know, as a trader, there's so many brokers out there, which is awesome because we can ensure we're picking the best one that meets our needs. So guys, make sure you guys have good tools and platforms, because that's going to be how you make money. There's no sugarcoating it, right? Pick the broker that you know how to use and that you feel comfortable with here. The next thing that you guys need to master is risk management. Risk management isn't making money. It's preserving your cash and, you know, preserving your account. The first thing that you guys can do to ensure good risk management is have good position sizing. Don't risk more than 1% to 2% of your total account on a single trade. The next thing you guys can do is always set stop orders. Stop loss orders are very, very easy easy orders that you can place with your broker that will ensure that once the stock reaches a predetermined price, it will automatically sell your stock. This will prevent emotional decision making. It will protect you against large and unexpected losses. So, for an example, if you buy a stock at $100, you might set a stop loss at $95, ensuring you won't lose more than $5 per share if the trade goes wrong. The next thing that you guys can do is have a good risk and reward. So for me, I love having a minimum of 2 to 1. So meaning I'm risking $1 to make $2. So an example of this is if you risk $100 on a trade, you should aim to make at least $300 if the trade works in your favor. That would be a 3 to 1 risk and reward. Having this will help you maintain profitability even if you lose more trades than you win. Because if that just say your risk and reward is 4 to 1. So meaning you're risking $1 to make $4, you could be wrong 3 times on that sort of trade and still make money off it, which is awesome. So having a good risk and reward is super important for trading. The next thing that you guys need to master is emotional discipline. 80% of trading, in my opinion, represents emotional decisions. You know, when you're up on your money, you may have a lot of hope. You may be, thinking the stock's going to go to $1 million, and you may be very, very happy. And this could help, and this could cause you to hold a stock longer. When you're holding a stock longer, you think it's going to continue to go up. And then on the flip side, if you place a trade and you're down on your money, the first thing you think of is how can I get this money back rather than just sticking to your trading plan. So the first thing that you guys can do to help with your emotional discipline is to stick to the plan. Avoid making impulsive decisions from your plan based on emotions. I think we all remember the whole AMC GameStop era where everybody was buying GameStop and there was millions of people that lost money on that. And that is because emotional discipline. They kind of went with the masses. They had massive amounts of FOMO, fear of missing out. Another thing that you guys can do is just prepare yourself for the mental demands of trading, especially during a losing streak. Have the rule of threes. The rule of threes is if you take 3 good trades in a row and they're profitable, take a step back, review what went right, what went wrong. Then if you take 3 losing trades in a row, take a step back and review what's going on. Doing that will help ensure that you're going to continue to, seek out those stocks that meet your strategy. And it will also, if you're on a losing streak, it'll have you take a step back and look at what's going wrong. Another thing that you guys can do is just track your trading. This is a trading journal that I use and I love, and I'll put it down below for you guys, but you don't need this. This is the one that I sell. You don't need this. You can use a 99-cent journal from the dollar store, but helping and keeping track of your trading is very important because it will help evaluate each trade and it will allow you to identify what's working and what's not working, leading to continuous improvement, which is great. You don't need to make $1 million. You just need to learn and continue to improve your trading each and every day, and you'll be on the path for massive success. So off to the right here, you guys will kind of see this is in the trading journal right here. This is how one of the pages look, and you guys can see you can track your performance, your direction, position side, risk and reward, mindset, trade breakdown, and then all the way down here we have errors and ways to improve so you can continue to evaluate your trading. Another thing that you guys can do is just simply backtest your strategy. Use historical data to test how your strategy would have performed. This helps identify strengths and weaknesses in your approach. So you guys can backtest with the broker Moomoo. They're awesome. Like I said, I use them every day. They're really great. But backtesting, is an easy way to see what has worked in the past so it can work in the future. I love the expression, what history tends to repeat itself. And so, backtesting your strategy is an easy way where you can continue to work on a strategy and it doesn't cost anything. Another thing that you guys can do here simply is just have realistic expectations. Don't expect perfection. No strategy works 100% of the time, except that losing trades are part of the process. Adjust over time. Your plan will evolve as you gain experience and the market conditions change. The markets change every single day. Your strategy will change as well. And another thing too is, if you're starting out with a small amount of money, whether it's $100, $500, or maybe a small amount of money to use $10,000 or $100,000, don't expect these massive returns right off the rip. Have a window of like 2 years. I think having that window will ensure that you're going to focus on education rather than focusing on trying to trade. Brokers nowadays make it super simple to jump in the driver's seat, start buying stocks and start trading, which is great. But on the flip side, when they make it that easy, you'll have a lot more beginners and novice traders start trading and expecting these massive returns. So take a step back, focus on education, and doing that will ensure setting realistic expectations. You won't have as heavy of emotions weighted on you. But guys, these are simple things that you guys can do to help build your trading plan. I hope you guys all enjoyed this. If you did, hit that like button, subscribe, and don't forget you guys can use code LEARN to get 50% off. I'll see you guys in there, and I hope you guys have a great rest of your day, and take care.